Well, hello everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining us today for the mechanics of an overseas trade. Now, I'm very pleased to have with us to handle today's event Andrew Wilkinson. Andrew is our Chief Market Analyst, and he's going to be delivering today's presentation. Oh, and I'm going to hold on for just a minute. Okay, Andrew, thank you for joining us, and thanks everyone. I just realized I do have today's presentation open, so I'm going to actually bring this, pass the ball over to Andrew. Andrew, I see that you're on the call today, so let me give you today's, or the ball, so that you can get us started here today. Thanks, Andrew.
Thanks, Cynthia, and welcome everybody to today's presentation, The Mechanics of an Overseas Trade. Today we're going to examine two available methods investors can use in their Interactive Brokers account to invest overseas, and we'll try to explain the impact on the account statement under both of those methods. So the slide I'm about to put up on screen right now should serve as a warning of certain risks associated with some of the products that we'll discuss in today's session. So please take a moment to read that disclosure slide in its entirety, and then we'll begin. And the format of today's presentation will be in a PowerPoint setting, and as we come to the conclusion of the PowerPoint, I'm going to ask Cynthia to display, using her Trader Workstation, how to input both of the methods using a live trading example. Okay, so then let's move on to the beginning of today's presentation. Recognizing that its customers are located all over the world and may want to trade in countries outside of their domestic area, Interactive Brokers has simplified the transaction process. Buying stocks in foreign companies and priced in currencies other than that owned by the customer can be done using loans made by Interactive Brokers or by converting sufficient proceeds to cover the stock transaction ahead of or at the same time. Interactive Brokers allows its customers to trade multiple asset classes in many locations around the world. It also permits investors to choose from one of 17 base currencies when deciding the primary funding unit for their accounts. We'll first review both methods of settling foreign share transactions, and later in this session I'll return to the mechanics within the Trade Workstation. So there are several items to think about when considering trading in global products. So investors should consider trading risk as well as exchange rate risk, and the fact that the trade will settle in an alternate currency to their own, and the possible need for local market data before you can trade. The process of trading in an overseas market is made very simple in an IB margin account, thanks to the use of real-time risk monitoring enforced by our credit manager. Before execution of a trade in shares settled in a foreign currency, the credit manager checks the client account to verify whether a credit balance in the settlement currency exists. If it does, that credit balance is used first. If not, IB automatically creates a loan in that currency to cover the settlement value of the transaction. In other words, two separate methods exist for dealing with non-base settlements. Customers either deal with a currency conversion or they are dealt a margin loan. For a cash account, the procedure is different because it is not permissible to make loans inside a cash account. In that situation, clients must either deposit sufficient funds in the settlement currency account before the account will successfully permit the transaction, or clients can make a currency conversion transaction first, bearing in mind that a currency transaction settles in 2 business days before the cash becomes available for trading. Let's start with the currency conversion and address the double risk associated with trading foreign stocks. And while there is no simple answer to locking down risk, you need to understand the exchange rate and market risk that will always be present, and how to recognize in advance what you should be aware of. So to illustrate the process of currency conversion, let's assume that an investor holds the sum of $15,000 US in an Interactive Brokers account. The investor decides to buy 10,000 shares in a British company, UK ABC Corporation, trading on the London Stock Exchange at £1 each. At the time of the trade, the exchange rate between the US dollar and the British pound is exactly $1.50, so that £1 buys $1.50 US. Conveniently, 10,000 shares in this case will cost the investor 10,000 British pounds or 15,000 US dollars. The investor decides to convert this precise amount by using $15,000 to purchase 10,000 British pounds, allowing him or her to settle the share purchase in full in British pounds. So now I'm just having a little, there we go. So let's assume that after a few weeks of no action for the share price, the investor gives up and decides to sell the position at the same £1 per share, so no capital loss or gain results from the transaction. By selling all 10,000 shares, the customer now has a $10,000 account balance, which is of course in British pounds, not the customer's base currency. However, when the investor enters the reverse currency transaction to get pounds back into sterling, he or she finds that the pound has fallen against a stronger dollar, where the pound now buys only $1.40. So selling 10,000 pounds at $1.40 leaves the investor with $14,000, which means a $1,000 capital loss due to a rise in the value of the dollar, while his or her investment was denominated in British pounds. So now let's examine the same process in which the position was closed at the same price it was bought. But this time, let's assume the value of the pound rose against the dollar. So the investor now sells all 10,000 shares at £1 each and leaves his account with a balance of £10,000. In this case, though, the rate of exchange has moved to $1.60, which means that the British pound buys more dollars than at the time of the initial transaction. So when the investor converts 10,000 pounds back into dollars, it produces 16,000 US dollars, or a windfall gain of $1,000, despite no change in the value of the underlying share price. In this case, the investor has benefited by holding a position denominated in British pounds, thanks to a weakening of the dollar. You should be able to see by now that the rate of exchange is, of course, a factor when making transactions abroad. Let's look next at the impact of the exchange rate on the outcome when the initial share investment gains in value. So let's say then that the share price rises by 10%, at which point the investor is able to sell his shares at £1.10 each for a total value of £11,000. The investor then has a capital gain of £1,000, but still faces the hurdle of repatriating the funds to the domestic currency. At an unchanged exchange rate of $1.50, the investor's capital gain would translate to $1,500 upon conversion. But notice what happens if the dollar strengthens to $1.40. The gain is reduced to just $400. But if the dollar weakens during this time to $1.60, the gain is magnified to $2,600. So when the share price gains in British pound terms, the dollar results will depend on what happens to the rate of exchange. Here, the gain is eroded by a rise in the dollar and magnified by a fall in the dollar's value. Let's revisit the same scenario, but this time we can examine the impact on the final outcome in the event that the share price loses value to 90 pence per share. At this point, the investor decides to take a loss of £1,000 on the investment before dealing with the exchange rate transaction. At an unchanged exchange rate of $1.50, the investor's capital loss would translate to $1,500 upon conversion. But should the dollar strengthen to $1.40, the loss increases to $2,400. But if the dollar weakens during this time to $1.60, the loss is reduced to $600. So when the share price falls in terms of the British pound, the translation back to US dollars depends on what happens to the rate of exchange. Here, the loss is increased by a rising dollar and is eroded by a decline in the value of the dollar. Using currency conversion method, the investor must understand the implications of both capital and exchange rate movements when investing overseas. The alternative to converting between currencies is to borrow the money from Interactive Brokers. Such loans are an automated feature within margin accounts. As I mentioned earlier, margin loans are created when an overseas transaction or a non-base currency trade is made. The credit manager immediately checks for an account balance in the non-base currency to settle a trade, and if one does not exist, the money is loaned to the customer against the value of the base currency. In this case, the investor uses a $15,000 balance in his account to purchase 10,000 shares in UK ABC Corp, trading on the LSE at £1 each. But the customer does not convert the dollars to British pounds. So in order to settle the transaction, IB loans the customer British pounds, but leaves the $15,000 account balance intact in his Interactive Brokers account. In order to fully settle the purchase of £10,000 worth of British shares, the investor needs to borrow $15,000 at the prevailing exchange rate of $1.50. The customer may earn interest on the $15,000 deposited in his account, but will pay the prevailing cost to borrow £10,000. The spread differential may end up costing the investor, depending on the structure of global interest rates. Let's now look at several scenarios to consider the impact of moving share and currency prices. So let's examine the impact of a change in the share price on the customer's loan balance. Let's start by assuming that the investor sells the share after a 10% price gain. A 10-penny rise in the price of 10,000 shares of UK ABC Corporation would yield the investor a capital gain of £1,000 after the £10,000 loan balance has been repaid. The customer may also then convert that post-loan profit back to dollars at the prevailing exchange rate, which may be different than the $1.50 exchange rate at the time the loan was originated. You can see a change in the value of the dollar might impact that $1,000 capital gain. Assuming the exchange rate remains stable, the pound sterling profit becomes a $1,500 gain for the customer. Should the dollar lose value and fall to $1.60 per British pound, the rise is magnified to a $2,600 gain. But a rise in the value of the dollar to to $1.40 per pound erodes that gain to just $400 upon conversion. If we now assume that the investor takes a loss of 10 pence per share, you can see that the investor will face the additional problem of having to find more capital to repay the original loan. By closing the position for a 10% loss, the investor realizes proceeds from the trade of 9,000 British pounds, but the customer faces a £1,000 shortfall in paying off the loan principal. In the event that losses on open positions cause a customer's account equity to fall below minimum maintenance margin requirements, IB's real-time margin system may liquidate some or all of the positions in the account to limit potential losses to the client and to the firm. The customer must now find £1,000 to repay the loan from the dollar side of his or her account, and depending on whether the exchange rate has risen or fallen, will determine the exact dollar amount needed for conversion. The customer is faced with a rising commitment in the event that the exchange rate strengthens in favor of the pound and against the dollar. A 10% appreciation of the dollar to $1.40 per pound reduces the conversion required by $200 to $1,400 compared to the original $1.50 exchange rate at the time the original transaction was made. If the pound strengthens and now buys $1.60, the deficit increases by $100 to $1,600. So to review, investors have two possible approaches to funding overseas stock transactions. As with any investment decision, investors face risks as well as rewards, and neither solution offers complete protection. Each has its pros and cons. Under the currency conversion process, if converting a currency sum first, the investor faces currency risk on both the underlying principal and on the daily share price fluctuations. But by taking on the prospects for currency changes, the investor eliminates financing costs. Using a margin loan, the investor might remove the currency risk from the principal amount of the transaction, but might face a shortfall when repaying the loan in the event that a capital loss occurs. Daily P&L is also subject to currency risk with a loan on currency. In addition, the investor might also be subject to finance charges depending on the spread difference between the currency in which his account is held and that in which the loan is undertaken. And also bank holidays can extend the settlement of forex trades, and the finance charges on the currency loans must be considered when computing the costs of trades across multiple markets. So now, those are the associated complexities of the mechanics of an overseas stock transaction. So what I'm going to do now is ask Cynthia if she'd help further our understanding of this and look at Trader Workstation and show us how to actually place the trades using both methods.
Okay. Well, Andrew, I've grabbed the ball, and I'm going to go right into a desktop share so that we can see my version of TWS. So everyone, your screen is going to blank momentarily. And what I'm also going to do is actually put this into full screen mode so that everyone can see what it is that I'm doing within TWS. Now, notice that I have brought up the Trader Workstation, but what I do want to start off with is actually, let me see here, oh, here we go, is underneath the account window, because before we actually begin to trade, I want to show you the account window, which is going to give you a recap of all your account balances, margin requirements, and what you have available for trade. But notice the market value section. Market value is where you're going to be able to view all of the asset classes you hold in your account by currency that they're traded in. Each position that you put on is traded in its local currency. So I wanted to point out a couple of things ahead of time because Andrew mentioned two different possibilities you have. You'll notice here with the Aussie dollar, I actually do have a stock position, an Australian stock position. Notice that the position itself and its value is included here in Australian dollars. You'll also see in the total cash account is the amount of Australian dollars I have available within my account. Now, this is when I've had, or this is an example, by having deposited Aussie dollars, I have not yet created a loan. It's using the Australian dollars that are included in my account. Now, if you don't hold the base currency, notice here's an example with Swiss franc. I actually put on a stock position yesterday, and you'll see here that the cash balance, because I didn't hold any Swiss franc in my account, is actually a negative balance, or in other words, a margin loan had just been created. So you'll see the difference will appear within your account. Also, by the way, I do want to show you that when you're viewing these balances, while they are in alternate currencies, notice if you simply right-click on your cash column header, you can go in and show that position in the alternate currency. So very quickly, I'm able to view what those positions are based on the underlying U.S. dollar that's held within my account. So you'll be able to see, and by the way, notice here how it is displayed in italics. so that you are aware that it is showing you this displayed in your base currency. Now I'm going to simply right-click and deselect that so that we can see the values underlying in each currency in which those positions were added. Now, because markets, what I'm going to do is I do want to point out, first of all, the Canadian dollar. Canadian markets are open right now, so we will go in and do a Canadian trade. By the way, there are small residual balances that are left in your account when doing a currency conversion. When you do work in a live account, these will be flattened at the end of the day. Okay, so I did want to point that out. Well, now let me simply minimize the account window, and you'll see I've got two separate positions here. Let's go with the Canadian Pacific Railroad. By simply clicking on that, I'll go in and create a buy order. You can change the quantity, and I like to keep it in round numbers, so I'll simply up that to $1,000. We'll keep this as a limit, and notice here that by simply clicking the bid or the ask price, and I'm going to put it up to the ask price, it's a day order, and we'll go ahead and submit that trade. Now notice here, well, I'm going to deselect this here, and we'll override and transmit. That order is currently working. Just as soon as we do receive a fill, we'll be able to see it populate within the window. By the way, let me go in here, and I should have put this in as a market order. So I'm going to adjust that, update the trade, and we'll begin to see that fill almost immediately. Notice here I'm getting partial fills, and you'll see that I've now been filled for the entire position that I put on. Oh, here we go. There's 900 shares. There we go. Now that position has been filled. Let's go back into the account window and see what just happened, though. By going to the account menu, you'll see I've now added Canadian dollars as a margin loan. There was no Canadian dollar ahead of that trade. So notice here how it actually does display. And by the way, even in this window, you can view the current exchange rate. It's a field that can be added to the balance. Now, once you do have that margin loan, you can alleviate that at any point by simply, notice here, I'm going to right-click and choose to close that currency balance. Here, and again, because of the trade precision, there might be some small residual balances. But I'm simply going to go ahead, and you'll see that trade has automatically been entered, and I'll simply transmit, and again, I've got some messages there. Notice now how that currency conversion has just been done. Let's go back into our account balances, and you'll see that I now have that small residual balance. So there is a way that you can do this, and then once you do have created that loan, you can very easily, at a time of your choosing, simply choose to convert the balances there. Now let me also show you, because there's another way that you can initiate this trade. I'm going to go back into the mosaic, and this time let's pull up Bank of Montreal. Now I'm going to do another trade here, and again we're going to bring this up to 1,000 shares, and instead of a limit, we'll go ahead and put that in as a market order. But prior to actually transmitting that order, notice the advance button. I'm going to go in because we do have an order type called an FX hedge. So I'm going to expand the hedge section. Oh, and it does make me want to buy or sell, so I have to make that selection. Let's go into the hedge, and notice here it shows up as a beta hedge, but there's a drop-down menu where you can choose FX order. Now, TWS is going to ask you if you automatically want to do this as a currency conversion or as an FX trade. Now, there is a distinction here, but because we do want to simply make that conversion, notice I'm going to make that selection and then go ahead and submit my order. Now you'll see that order, and again, we'll, by the way, notice here it is showing you both the buy for the underlying, and at the same time, we're going to make a currency conversion. So I'll go ahead and overwrite and transmit. Now notice what does appear within the order entry panel, and it happened very quickly, but I did want to show you this icon in the quantity field, because as I'm looking at that, it will give me the approximate amount of that U.S. Canadian dollar conversion. So it actually does display directly within your account, your order activity monitor. But let's go back and see what happened within the account screen. This time you'll see that I've now created or added an additional position. And by the way, notice that your positions are included in the portfolio section here based on Canadian dollars. Both of those positions were indicated down below. But you'll see this time, instead of creating a margin loan, there was a small residual balance, that no additional loan was created. So the choice is really up to you, whether you want to make that conversion ahead of time and place the Canadian dollar within your account, or make the conversion at the time of your trade. So I did want to point out a couple of those examples. Now, by the way, the choice between a margin loan or a currency conversion is entirely up to each individual trader based on your personal appetite for currency risk. Now, as Andrew mentioned earlier, I also did want to mention if you have a cash or an IRA account, you're not allowed to create that margin loan. So what you will need to do is create a or simply convert some of your base currency into that alternate currency. Now notice here, I'll simply put the U.S. dollar, CAD, and notice here that I can initiate a currency conversion using some of my U.S. dollars to buy those Canadian dollars. So from here, I'll simply initiate this, and for example, you can choose any quantity, and again, I like to work in round lots. Now, I do want to point out that if you are making this conversion, do be aware that because of currency fluctuations, that you may not want to convert the exact amount. So let's go into a previous amount here. So for that quantity, and I may, let's just round this off, and I'll put this at 75,000 here. So I can make that conversion and simply transmit this trade. So let's go ahead and we'll transmit this trade. Oh, let's go ahead. Oh, and in this case, I believe I want to sell. So what I'm going to do is sell some of those dollars, or sell some of my U.S. dollars to purchase the Canadian dollar. We'll go ahead and transmit this trade. Once that trade has been filled, you'll see that Canadian dollar balance will be included within my portfolio. So, are there any questions at this point? Go ahead and enter them into the chat panel if you do have questions. Let me see. Let's go back into, I'm going to go back up here. Into my account balances so that we can check that window. Now notice that by doing the currency conversion ahead of time, you'll see here that I now have a sufficient balance in Canadian dollars. So rather than having to do the to do any sort of conversion, once I do go in and initiate a trade, it will first utilize the Canadian dollars in my account. So hopefully that was clear. If you do have any questions, I want to ask that you go ahead and put them into your chat panel at this point. Okay, Andrew, are you seeing any questions? Well, first of all, I do see that Bertrand was asking, is it recorded? And yes, it has been. So, and by the way, everyone, you'll all be getting a direct link to today's recorded playback soon after the event ends. So go ahead and review that information or watch your email later on this afternoon. Now, I do see another question. For the attached FX order, do commissions stack as if they were two different orders, or would it be a reduction in commissions? Well, let's actually go in, and you'll notice here, I'm going to go into my trades account. So, and by the way, notice that this section here where I did do both the I initiated a trade and used the currency conversion at the same time, you'll be able to see that, yes, there is commissions that are charged on both sides of that trade. So I think that's what you may be looking for. So yes, for each of those trades, notice here that with our reduced commissions, you'll see that each lot of that trade, as well as for the FX conversion, that commission amount is included.
Cynthia, one of the questions there raises a good point about partial fill. So you tried to buy 1,000 shares of BMO, which you're illustrating there has been broken down into several lots, yet the currency conversion, the running side by side as a separate order, or as an attached order rather, occurred in one block.
Yes, it did, and that will occur once your order has been completely filled. So notice here, you'll be able to see the time, and once that order did fill, although I did get some partial conversions here, and then almost immediately afterwards, you'll see that FX conversion was also filled here as well. So it did fill, and it looks like it filled on the entire amount of that trade.
And there's another great question here, and I think the, oops, I've lost the question because somebody's typing in a new one. What are the parties executing currency conversion orders? So for the currency conversion, Interactive Brokers has an excellent and very robust platform. We have about, I think, 13 different providers who are major liquidity providers in the interbank foreign exchange market, whose total liquidity accounts for more than 85% of total global liquidity. So we're working with the biggest biggest providers in the FX market, which is why we're able to bring you quotes as narrow as 1/10 of a pip when it comes to the major currencies, and we charge a very, very small commission. So we're bringing you the best bid, the best offer, all together from different providers simultaneously, and we're doing the right thing by the customer. So I think those, I mean, it's not hard to find. You know, to find the biggest names in the foreign exchange market isn't very hard to find. They're probably listed somewhere on the Interactive Brokers website, and alternatively, you can find them in the Euromoney poll. The third question from the same person asks, when there's a margin loan in any currency, is it right to assume that any stock borrowing or lending fees will be disabled, i.e. will not accrue to the investor? And yes, that is the case. If you're buying stock on margin, then you're not going to be able to lend it out. If you sign up for the the stock yield enhancement program, basically that would only include fully paid up shares that you could then direct IB to lend out on your behalf. Looking across other questions here, a regulatory question from Sergey: how trade of British company can be organized correctly if member of my family is a member of the board of directors of this company? That's a good question, and I'm not really sure. That would be something you should ask the member of your family, whether you're allowed to trade shares in that company, and take it from there. Obviously, you'd want to avoid any insider trading, but I think that would probably apply, and you'd need to run this by your family member, and according to local regulatory requirements, you know, whether the trading restriction extends to you. I'm not sure that it does, but obviously I would not want or recommend anybody to be trading on any kind of inside information. There's no Canada-US dollar pair, it's only US dollar Canada. When buying Canadian stock with dollars in a cash account, have to first guess how much dollars needs to be converted. Well, okay, so a little bit of kind of organization here. Yes, we list IB lists the US dollar Canada pair. In terms of the market convention is indeed US dollars, Canadian dollars. So you need to figure out, yeah, if I need 100,000 Canadian dollars, how many is that? And you could work that back in the CAD.USU as the reciprocal. So 1 divided by the exchange rate will give you the amount of Canadian dollars you need to convert. The alternative is to look at the Canadian dollar currency future traded actively on the CME, which is quoted as the reciprocal, so you'll be able to figure it out from there too. Do we have any more questions? Russell's asking about your BMO trade, Cynthia. The conversion happens before the trade. I don't think it did. The currency conversion happened 7 seconds after the trade. Is that right, Cynthia?
Yes.
Sorry, looking at the timestamp, I think that's the different trade.
Oh, this is it. I'm sorry. I do have the trade underneath it actually displayed.
Yeah, it happened a second later, right? 127.06, 12:27.06.
And here it is. Here's that FX conversion that we can see here. I believe this other one was where I did do a currency conversion back from, let me see, this was prior to, notice here, this currency.
That was your separate currency transaction, wasn't it? So when you simply sold US dollars to buy Canadian just to have available funds in your account.
That's correct. That's correct.
Right. So it looks like there's a 1 second delay, right, between buying BMO and then selling US dollars to buy Canadian.
Right. As soon as I was filled, then the order goes in as a market order for that FX hedge. So you'll see this here. So I did have the timestamps different, but it did occur just a second afterwards. So notice that was the amount of that BMO trade. So that actually did the currency conversion. This conversion that I had done earlier was actually converting the amount of my Canadian Pacific, my CP trade, back to the base currency. So sorry about that confusion there, but it is this trade that that occurred. It's once you do receive a fill, then then the the attached trade or that dependent trade will automatically enter the market.
Cynthia, could you flip over to the Classic Trader workstation and do an FX hedge with buying or selling another Canadian stock?
Okay, well, let me see. What I'm going to do, and I am over into Classic TWS, let's move over. I'm just going to bring up my Untitled page here, and what I'm going to do is add a ticker symbol. Now, notice when you go to add a ticker symbol, it's very important when you choose which routing destination. And for U.S. stocks, it would be Abbott Labs, but those that are trading on the Toronto Stock Exchange would be Absolute Software. Now, I've brought up Absolute Software here, and at this point, let me see. Would you repeat the question there, Andrew?
Yeah, just to attach an let's go and buy or sell some of the shares there.
Okay, so I'm going to go ahead and purchase, okay, by clicking on the ask price. Now we can go ahead. I'm going to leave that at the market, and let's also, just so that you can view some amounts, I'm going to up that to 1,000 shares. Now at this point, if I put it in based on whether I have Canadian dollars in my account or if I don't, a margin loan would be created. But
sorry, can I hold you right there, Cynthia, because we can handle two questions at once there. Arno asks the question, what's happening if I buy a foreign company and not execute the foreign exchange trade? So could you just explain that again? If you're just clicking on the buy price here, you're creating a buy order. If there's no money in your Canadian dollar sub-account, IB will issue you a loan. What Cynthia is doing right now is about to attach an FX order that would help settle the trade.
Okay, and what it is, if I do not have Canadian dollars, notice here, I simply need to right-click on that order row and choose Attach, and you'll notice there's an extra arrow here. That arrow means that you're not seeing all possible choices. So by expanding, notice I can select the FX order. Now again, TWS is going to ask automatically if you want to do a currency conversion or an FX trade. Now, rather than talking about trading currencies right now, we're looking at this as a conversion. Now that actually has to do with the way it's shown in your account, but I'm going to choose a currency conversion. And notice at this point what it appears, or how it appears within the classic version of TWS, is my initial order for 1,000 shares, and then notice here I've attached that currency conversion. Again, when you see that small little icon that appears in the quantity field, this is what's going to show you the approximate amount of that order. So for the person who was asking previously, notice that it is going to give us an estimated amount to make that currency conversion. So from here, I simply need to transmit this. Let's override and transmit this. And I'll simply close out of that. And notice now, as this, let's see, it will fill here momentarily. Let me see if I can actually force a fill. I'll make this a market order and update this. And now notice where I am, you'll see here, this message is letting you know the difference between trading currencies and making a currency conversion. Now, when you are trading currency, there is a minimum order size. Otherwise, it will be treated as an odd lot. Now, this actually goes back to our previous question here. Notice that that FX conversion does not trigger until you have been completely filled. But you'll see here the approximate amount of that trade. Once we do get that final amount, we'll actually transmit that currency conversion. I also did want to mention here as well, if we go back into our account window, someone was asking about my small dollar loan that I had before. I happen to be in a paper account. Now, when you are in a live account, those small residual balances that remain within your account are actually flattened at the end of the trading session, so that your account does go back to zero. With paper accounts, though, that does not happen. So just be aware of that. So when you do see those small residual balances for any of these currencies, that occurs in a paper account and not a live account. Now notice here, I do happen to have sufficient value within my with Canadian dollars. Now notice, this actually is Canadian dollars that are held in my account within that account window. Okay.
So Cynthia, is there any customers getting penalized by trading? You just put on a small trade there where that you were given a warning that this was less than the 25,000 minimum. Are customers being penalized on the exchange rate in that case?
Well, what occurs when you are trading currencies, so doing currency pair trades, that we have actually two separate, and you'll notice here, I've got some currency pairs that appear above. Now, and this is the message that you were saying. Mm-hmm. Now, there is notice here when I do have, and I'm going to go ahead and we'll put the US or the Canadian dollar in as well up here. Let's just add the USD.
Oh, you have. Oh, okay. I was going to say you have it below, but it's separate, right?
That's part of.
That's related to the order, right? Yeah.
So what I did want to add was just a market data row so that you can view that information. Now, when you are trading currency pairs, for example, and we did just get a fill. I'll go back in and take a look at that in a moment. But when you are trading the currency pairs, there is a minimum order size for the, notice here, we're showing you current quotes that are down to only a half a pip. So you'll see the actual quotes are available here. When trading approximate $25,000 or greater, you actually do qualify for these quotes. Now, if you are trading smaller amounts, on TWS, they are treated as an odd lot order. So they will be filled from 1 to 3 pips outside the U.S. Or the interbank quotes that are displayed right here. So it is a matter of quantity traded, so do keep that in mind.
Great, thank you for that explanation. Go ahead, Cynthia.
Oh, I just saw Robert's question. He uses the classic TWS and can't find how to initiate a stock buying order that includes that automatic FX conversion. Well, what it is, Robert, when you are trading these, and I'll go ahead and initiate that trade. It is a simple right click as if you were going to attach a bracket trade, but it is the arrowhead. Now these order types are deactivated or they're not visible by default. But if you do start to use it, notice now, once I did make that selection, it now does appear when I go into the attach, you'll see here that FX order. So it is available. You'll simply have to use the arrowhead to expand this menu selection to go in for that FX order.
Cynthia, Tom's asking a follow-up question on the USD.CAD versus the CAD.USD, and he's saying that if he has 10,000 Canadian in the cash account, he can't sell that exact amount. And I disagree with Tom. I think that you can close the position.
Well, let me go back and show Tom how you can do that. And it's through the account window. Now notice I'm in classic TWS. I could go through the quick access icon or through the account menu drop-down. Account window is available whether you're in Mosaic or Classic Trader Workstation. Now notice I have quite a bit of Canadian dollars in my account. To close that position, you will have to go from the market value section here. Simply right-click and choose to close the currency balance. Doing this, there may be a small residual amount that remains in your account due to the limits of trade precision. So we'll go ahead and do that. Notice here, it actually jumps back over into my main window. Now I do want to point out a destination field here, which is important when you're doing currency conversions. Notice that if you were trading currency pairs, you would utilize Ideal Pro. But for currency conversions, FX conversion is an available selection and simply transmit your order. Now notice that that currency has just filled, so let's go back into my account window. I'm sorry, not my trades, but my account window. Notice, again, there's a small residual balance, and in a live account, that will be flattened at the end of the day. But you'll see here that I was able to convert those Canadian dollars back into U.S. dollars, so now I just have that small residual balance.
You're asking a question there about the beta hedge, which is completely different. This is to eliminate market risk. So I've just put a link up in the chat panel for everybody to see oops, no, I haven't done it there to everybody. Let me try that again. To all participants, there's a link to the beta hedge, which is really, I think, for hedging market risk associated with exchange-traded funds. So that's different from what we're talking about today, which is currency risk and buying overseas stocks.
Okay, and Alex was asking, what do I mean by flattened? What I mean is at the end of the trading day, that balance will be converted at no additional charge. So it will zero your balance out and convert it back to U.S. dollars or back to your base currency. So depending on these balances. Now you'll notice I do have small residual balances here because I happen to be using my paper account. And these balances in your live account will actually be handled automatically by the system.
Cynthia, let me ask you a question from Dominic. You've demonstrated how to attach a child order, an FX order to an overseas Canadian stock. When it comes time to selling the stock, to closing the position, do you need to create a separate FX order to close the FX side of the position? Will TWS recognize the child order?
Well, let's go in and take a look because now I do have positions in the Canadian dollar. So I'm going to close out of my account window and actually let's go into the portfolio. Now you'll notice here in my portfolio I do have, you'll see those positions are available. So what I'm going to do is let's actually take that Canadian Pacific and by simply right-clicking within Classic TWS, I can choose to close that position. Now notice that because this does trade in Canadian dollars, as soon as I make that, and we'll go ahead and override and transmit, as soon as I have been filled, we'll go back into the account window. Notice that I'm getting some partial fills here. And we should see it fill in just a moment. We're about half and half. There we go. Notice now, let's go back into the account window because this is where you'll be able to view it. Now, by closing that position, I added Canadian dollars back into my account. Here, that Canadian dollar amount is a positive value, so it is showing you that it is included in Canadian dollars. Remember, if you'd like to see what that value is according to the current exchange rate, you can simply right-click on your column header and show those positions in your base currency, which in my account happens to be in U.S. dollars. So you'll see here what is displayed in italics is showing me that value in U.S. dollars, but it's still in Canadian dollars here. So I'll simply deselect that. Now remember, if I want to convert those Canadian dollars back to U.S. dollars, I could simply choose to close that currency balance. Or also remember that you can either make that conversion or you can choose to allow the asset and the balance to fluctuate in that alternate currency. So once you've closed that position, the gain or loss would remain in the, and in this case, in Canadian dollars, which can accumulate in your account for the next trade. So it's not necessary that you go in and make that conversion. You can allow it to accumulate, but do keep in mind what Andrew was talking about at the beginning of today's session is that currency risk as each of those currencies are fluctuating within your account.
So trading overseas stocks, the mechanics of it at least, is not an easy process for everybody to understand, but hopefully we've tried in today's session to explain the risks, and we'd like to think that we can perhaps help IB clients understand some of the risks or all of the risks involved in trading overseas. What we're going to do right now is IB management always asks that we run a poll during our session. So Cynthia, if you'd be able to put up the poll for us while we bring today's session to a close. If you have any further questions, you could perhaps type them in the chat panel, or alternatively, if we haven't answered you anything to your satisfaction, please do send me an email. I've just put my email address up in the chat panel, and Cynthia has put up the poll on the screen. So if you can answer those questions, 1 and 3 are very straightforward. Just click in the appropriate bubble, and if you have other requests for information you'd like, please feel free to type them into the box available on question 2. We have about 15 seconds left. Once you've submitted, once you've put your answers in there, use the submit button at the very bottom of that page. We've got about 7 seconds, so please go ahead and complete your inputs and click submit. And Cynthia, are there any other questions we need to answer today before we bring today's session to a close?
Well, there are a couple of questions that I've been seeing in the chat panel. And by the way, everyone, you can simply use the X that's included in the polling panel title bar and get that screen totally out of your way. Now, I do see Tom had a question about doing that in a cash account. Now, if you do try and close that, and you're right, I do have a margin account. I don't happen to have a cash paper account available at this point. But Tom, if you are working in a cash account, remember that you're going to want to have a bit of a buffer to account for those currency fluctuations because if you're not allowed to create a margin loan, and if there is insufficient buffer available in that currency in your account, it could force a liquidation of that position. So you are going to want to add a little bit more and then monitor, or when you do that conversion, don't do it for the exact amount, because as those fluctuations do occur, it could create some issues in your account. Let me see. Also, I had Patrick was asking about the Chinese A shares. Well, let me actually go in. One of the items that I was working on just ahead of today's session is actually showing you using the market scanners. I'm going to go into the market scanner information because here, if you are looking for those Shanghai, Hong Kong Stock Connect, notice that I will make the selection here, but I also do need to go in and let me see, we'll simply, let me open this up. I want to find, oh, I know what I need to do here. So I'm going to go ahead and we'll choose Asia Active. But when I go in to customize this, notice what I do have the ability. I'm going to go into the universe. Oh, we'll start with Asia stock here. And I will, first select a region. Okay, hold on a minute. Let me go into this in a different way. I'm going to we'll open up the Mosaic scanner. What I am going to choose is Asia and stock. And here we have it. Go into the universe. And by the way, instead of selecting all of these, I'm going to deactivate these. If you are looking for those China, Shanghai, Hong Kong Stock Connect, simply activate this feature here, and then we'll go in and you'll be able to see the information over on the right-hand side. Now, these stocks here are going to be trading in renminbi, I believe, and you should be able to do the same type of currency conversions that we were talking about here today. So, Tom, by the way, everyone, I do suggest that you try this in your paper account before you do actually start trading live so that you can see the information and experience it for yourself within your account. Now, Alex was also asking dividends. Would they be paid in the original currency? And yes, they will. Whatever currency that instrument is trading in, it will trade in the original currency. So do be aware of that. And any dividends paid would also be added to your account in that original, in the currency in which that particular ticker symbol does trade. Okay. George is asking, will we do a seminar when the trader is temporarily overseas and wants to trade from an IB account? Well, George, you can do that from wherever in the world you can access Trader Workstation. Now, I do want to point out when we go out to the Interactive Broker website, you'll notice there's a login screen. And if you log in electronically through our browser-based application, you'll be able to access TWS wherever you are. Now, it doesn't matter where you physically sit, whether you may be in Europe or in the UK, it is based on how your account is denominated. And let's go back into that account window where you can view remember your account, and you'll see when I go into the account window, you'll see that my account is denominated in U.S. dollars. So whether I'm sitting in the U.S., in Canada, or even in Australia, I'll still trade in U.S. dollars. It all depends on the instruments that you're going to trade, so be aware of that. Oh, and I see Ron was mentioning that 45 seconds wasn't enough time to answer the survey. But if you do have a comment, Ron, feel free to forward that on to us at webinars@interactivebrokers.com. We try and let that poll pass very quickly so it doesn't interrupt the session. Any IB bank link for info on FX hedging on overseas stock positions? Well, simply do that directly within your account with that FX trade. Now remember, these products are going to trade in whatever currency they are denominated in. So if you're trading European stocks or Asian stocks, they will be denominated in that currency. Then from there, it's a matter of choice, and it's left up to each individual trader whether you want to make the currency conversion or to allow that asset to fluctuate in an alternate currency. So that's a choice that's up to each individual trader. Okay, let me see. Any additional questions that you might have been seeing, Andrew?
I think that's everything, Cynthia. I think we've covered quite a lot in today's session.
Covered quite a bit. Well, by the way, what I am going to do is stop the desktop share and take us back into today's event viewer, where you can all exit the today's session using the X in the upper right-hand corner of the screen. By the way, you'll all be getting a direct link to today's recorded playback in just a little while. So if you'd like to come back and review the information, simply watch your email later on this afternoon. So with that, I want to thank Andrew Wilkinson for today's presentation. Thanks so much, Andrew, for that discussion. And it is very important that you're aware of what those currency fluctuations will do to your positions within the account. So with that, we are going to conclude today. Thank you all for your participation. Hopefully we've opened up a world of information available to you now. Thanks, everybody. Have a great day. And remember all to trade smart. Thanks.